Hey everyone, welcome to Smart Investing. In today's video, I have three banking stocks for you guys today, and we're gonna go over all the financial information for that. So the three stocks that I have for you guys today is LMFA, IBTX, and SOFI. Today is January 8th, Monday, 2:33 p.m. Markets are still open. They close in about an hour and a half. So anyhow, moving on to the first stock that we have is LMFA at 71 cents. And the volume is at 1.44 million. As you can see here, market cap is at 10 million. This is a very weak company. Earnings are negative. No dividend yield, so you can easily see these numbers are like awful. 52-week high is 1.5. 52-week low is not even 30 cents. Well, really 27 cents. So awful numbers. The chart here, 5-year, it had its 2020 downgrade, so it went from about $3 all the way down to like 70 cents, and it's been going down again the last 4 years. You had these pops in 2020, and then in 2021 a small pop for a few months, and it reached a total of about, I don't know, $10.40, and then after around the ending of 2021 going into 2022, it's just dropped from there. So awful company, and I guess very mismanaged. I'm surprised this stock is not even delisted. Let me see how long this stock has been under $1. So it's been under $1 for like months and months and months. I'm surprised it's not delisted. Maybe it hasn't, the SEC or whoever regulates these companies that are supposed to be delisted, maybe they haven't gotten around to it yet. Maybe they forgot, or maybe they just missed it and haven't paid attention to it. But I mean, this is obvious that the stock has been under $1 for like almost a year. And then, the numbers are awful. So again, I can't believe this stock is like not even delisted to a certain extent, and a surprise. I don't even know how and why and what gives it the benefit of the doubt. So anyhow, we have no numbers here. I mean, quant ratings are weak. We have negative earnings estimates, which is pretty bad. I don't think this company got bought out. I mean, it's still active, which doesn't even make sense. I guess people like to use it for trading. But let's go over the financial numbers, and then just for the kicks of it. These are all negative numbers. I mean, net margins. The debt is like 4%, but again, they're not even earning anything. It makes no sense. This is kind of funny. It's like you have no debt, but then you're just spending money. And for what? What good does it do if you're just not in debt, but then you're just spending money? You're better off just starting from scratch or getting bought out or something with that, because these numbers are just awful. Balance sheet, again, very low debt, 4% debt. But again, these numbers are horrible. Cash flow, let's see what they have. So I don't even want to do the math. So they're about let's see, 19. What is 19 plus 9? So around 27. So at least negative 27 million in debt. Sorry, not in debt, in negative cash flow. That's more than what they make in revenue. That's more than what they made in revenue. If it wasn't for 2021, that would have been combined for the last 3 years from 2018 to 2020. So obviously this stock is just horrible. Consumer lender. This isn't a cryptocurrency mining. So again, this stock is horrible. No need to even look at it. Next one up is IBTX. IBTX is at $50.86. Market cap is at 2 billion. 52-week high and low. Difference of about $35, 37 to be exact. Earnings are pretty weak, and then dividends pretty weak as well. I mean, a little too much. So pretty much what they're earning is what they're giving out in dividends. So that doesn't add up. So we have here the last 5 years. It's trying to catch up to its 2020 highs. It looks like it's doing that. Other than that, the last year again, it's trying to gain from its high back in March. And it's taken almost a year to gain that back. But again, November and December, I think, is a fake rally. It was just a bombardment of last minute buying. So, by the year end, people can say that, oh yeah, we performed well and all these asset managers made money and, everything is fine and all that, when it's really not. It's just a money grab last minute, pretty much. Little, what I like to call, last minute bailout. So moving on to what am I missing here? So the quant ratings, what do we have here? This is not a very active stock to trade, but other than that, the quant ratings say the lowest is growth, and then the highest factor is the income. I could definitely see that. The income, yes, just because for the income, you're pretty much, like I said, you're pretty much paying out what you earn. So 1.67 and you're paying out 1.52. That's a really big percentage. That's a really big chunk of what you're gaining for the year. So it just doesn't make sense. Let's go into the financials. So far, I don't like the chart. It's been down for most of that year. Last 5 years hasn't performed well. And then also the quants, I'm not too fond of them either. So let's look at the gap. So we have here just slightly positive earnings. We have here ROA is at 1%, ROE close to 8. Earnings per share is at 4.69. And then we have net margins, 32%. That's still pretty high, pretty good. Debt to asset, debt is at 86. Book value is at 57.9. Cash flow is at 5. I don't even need to look at that. But looking at the numbers there, margin at 32, 4.7. Net income is at 196, 609 is the revenue. So a third of the revenue is pretty much income. So let me see that. That is pretty amazing if that's actually happening. At 87%, which is typically lower than, it's about slightly lower than normal. Usually it's about 89%, 90%, the debt levels for a typical consumer lender or bank. Cash flow, the most important factor. So we have here negative 0.17 billion. So pretty much, yeah, this is unbelievable. So negative 1.7 billion in cash flow. In cash flow, CF. So biggest factor is that, and it looks awful. So if you have this stock, it is awful. No way at all. So ticker symbol IBTX, it's awful. Last one up that we have is SoFi, SOFI. Volume is really active for this stock at 23 million. Market cap is at 8 billion. Stock right now is at worth 8.55 for a gain of 4%. The last 5 years we have a drop. So from 2022, start of 2022 for that year, all the way down, just dropped. It's been awful. 52-week high and low, we have a high of 11.7. Needs some work, so I'm going to say no. Earnings are negative, doesn't provide a dividend, nor dividend yield. That's a big no-no. This one too, that's a big no-no. No positive factors. So everything looks pretty bad so far, even though it's an $8 billion company. Again, the charting looks weak. So I'm going to move on to the analysis part. So based on 18 analysts, the majority say it's a hold. Cancel that, cancel that. So 17 versus 6. If you had to choose a side, instead of being neutral, from buy to versus sell, you have the winner for being buy. 17% recommend a strong buy of 70%, and then a sell rating of 6%, and then a strong sell rating of 11%, but also the buy side is 11%. So we do have some people saying on Wall Street that, they don't like the stock, which is rare. So when you see an amount that high, especially like over 5%, analysts saying, oh, we don't like this stock, then yeah, they really dislike this stock. So we're going to move on to the financials, and then that's pretty much it. We're going to call this one a day. So looking at the earnings, they're going to report negative earnings. That's what they have for their estimates. Hopefully they can report above that just so they can look good. We have here ROA is at negative 2.2. ROE is at negative 6. Negative earnings, negative margins. Debt to asset, 70%. Debt. Moving on to the net income, negative 320 million. Revenues are 1.57. Numbers are ugly all over. Balance sheet is having their debt going up from 48 to 70. I mean, that's a 22% gain. That's awful. And then right here, they look pretty good. They're lowering the debt, and then right away they went up, and then went up again. It looks awful. So I don't even care what the cash flow is, but just to see it. So they do have positive cash flow, but their numbers are ugly. So 7.26. So 1.2 billion. So they have 1.2 billion for positive, positive cash flow. That checks out, but all the other numbers are horrible. So I'm also going to say no for this stock as well. So if you have these stocks, there you have it. No to all of them. Thank you guys for watching, and I'll see you guys in the next one.